If you are a crypto fanatic, I bet the name BlockFi excites you. This is by far one of the best holistic platforms that provide accessibility to trade, sell, or buy various forms of crypto assets with the help of BlockFi. With BlockFi, you can literally feel like the king of the internet, as not only is it easy peasy to use, but also to store at any place you prefer storing at. Unlike any other facilities that any crypto would provide, BlockFi is a genie to fulfill all your possible unique demands from the world of crypto. From providing phone support to purchasing and selling off digital assets at a competitive price, BlockFi is the dream world of a dream for crypto lovers. Welcome back to yet another amazing video coin engine. In today's video, we will be talking about BlockFi in brief. So, are you excited? Let's begin. Chapter 3. What is BlockFi? BlockFi is a wholesome platter of benefits that allows its users to trade, maintain a crypto wallet, and offer crypto-backed loans along with other handsome benefits. The journey of BlockFi began in the year 2017 in New York, United States, and since then, it has been active pretty decently. Despite the fact the concept of BlockFi sounds pretty exciting and fun, remember, the grass is not always green on the other side. We'll explain that to you shortly. Chapter 2. The decline of BlockFi. BlockFi, a cryptocurrency lender, applied for bankruptcy protection under Chapter 11 on Monday and became the latest victim of the collapse of FTX, a cryptocurrency exchange. Based in New Jersey, BlockFi was granted a reprieve this summer in the manner of an FTX credit line, despite battling for the majority of this year. However, FTX's own bankruptcy all but assured BlockFi's financial downfall. Considering FTX's collapse, BlockFi ceased withdrawals and recently engaged bankruptcy experts. One of the numerous new cryptocurrency lenders that have emerged in recent times is BlockFi. Customers' crypto assets were utilized as collateral when the company issued loans to them. Because of the significant decrease in the Bitcoin value, Ethereum, and other cryptocurrencies, BlockFi often had collateral that was worth less than the debt it was still owing. Moreover, FTX's credit card line from this summer proved to be a noose around the business's neck. BlockFi had alleged that after it ran through its own financial hardship, FTX's financial rescue packages were no longer available to it, and that any attempts to acquire additional funds in the days before the bankruptcy was not recognized. For the company, this exposure triggered a liquidity problem, according to the solicitor's court brief. Chapter 1. BlockFi gets CWD. The SEC announced on February 14, 2022, that it had negotiated a consent order with the financial services firm, BlockFi, which is situated in New Jersey. The SEC revealed, among several other factors, that BlockFi had breached the enrollment and anti-fraud guidelines of the Securities Act. Additionally, it has also breached the authorization clauses of the ICA of 1940 by not having registered the offers and sales of BlockFi interest accounts, a retail cryptocurrency lending product. Therefore, BlockFi agreed to pay a fine of $50 million, stop providing and selling BIAs without licensing, and make an effort to adhere to ICA within 60 days. In conformity with the order, investors borrowed digital currencies from BlockFi throughout its BIAs in compensation for a fluctuating monthly interest payment. Although the rate varied each month and relied on the amount and quality of cryptocurrencies deposited in the account, BlockFi advertised its interest account as a chance to make as high as 9.25% interest on Bitcoin deposited into the BIA. BlockFi used a variety of tactics to produce the interest cash payments to BIA investors, including lending cryptocurrency assets to borrowers, giving loans to retail investors, and investing money in equities and futures. On December 8, 2021, BlockFi, as well as its partners, had around 572,160 BIA investors, comprising 391,105 investors in the U.S., and held about $10.4 billion in BIA investor assets. Because BlockFi advertised and distributed the BIAs as financial intermediaries in compliance with SEC VWJ Howie Co., the SEC concluded that BIAs as unregistered securities. According to Howie, to establish that a commodity is an investment agreement, the plaintiff must establish that funds were invested in a partnership that would only profit from the labor of others. Regarding the BIAs, the SEC calculated that the investors' loans of virtual currency constituted investment opportunities in the capital, and that BlockFi's actions in pooling the investors' crypto assets and using them for borrowing and financing constituted a common enterprise. The investors in BIAs had a realistic expectation of generating a profit based on BlockFi claimants that it would start generating enough output to pay BIA investors interest. Finally, the SEC calculated that BlockFi had been continuing to operate as an unlicensed investment company in contravention of Section 7A of the ICA. This is because it was an acquirer of securities in the business of making investments, holding or buying and selling in equities with a level exceeding a total of 40% of the company's total assets. Without disputing or agreeing with the SEC's conclusions, BlockFi consented to comply with the Securities Act's anti-fraud and registration laws, as well as the ICA's regulatory standards. BlockFi also committed to stopping encouraging or offering BIAs in the U.S. Current customers will still be eligible to receive interest on their current holdings, but they will not be able to add any unique assets to their existing accounts. However, newbie-less clients won't be capable of opening BIAs. BlockFi also revealed that it would eventually transfer investments now stored in its BIAs to the new product, BlockFi Yield, and publish an SEC registration document for it. Phew, that was a lot of detailed depiction on BlockFi. However, this was a small token on BlockFi. For more such interesting stories, stay tuned and subscribe to CoinEngine.